afternoon, traders. It's Bill Baruch with Blue Line Futures, and this is the FX Rundown. We started the new week on the heels of a good jobs report. The dollar index gained about 1/3%. Jobs numbers were solid for October. However, it was highlighted by the September revisions. Strong revisions better for September. Average hourly earnings, big increase to 4/10. You had strong payroll increase as well. So that really provided the tailwind here to start the week. You also saw technical tailwinds. A higher low in the dollar index compared to about 2 weeks ago, and a lower high in the euro compared to about 2 weeks ago. Although Brexit uncertainties continue to persist, when have they not? But we did see bad numbers from ISM manufacturing after jobs on Friday, and a bad factory orders number here this morning. Really, though, what we're looking forward to is the ISM non-manufacturing tomorrow. It's going to be a crucial read at 9 a.m. Central Time. It looks like everything is sort of waiting on that. If that misses, we're going to see the dollar give up all these gains here from today, most likely. But as well, we didn't hear any comments coming out of ECB, the new ECB president, Lagarde, speaking this afternoon. No real highlight yet. You could see some rumblings here later today. But ultimately, we're on a path here, seeing again that lower high in the euro and a higher low in the dollar index. We're going to get resistance in the dollar index up to about 97.80 to 98, and then you got support down in the dollar and the euro down about a 111. Those would be some crucial levels here to watch as the week unfolds. Overall, though, 112 has been a sticky area in the in the euro, as has 97 in the dollar index. So keep an eye on those too upon reversals from today's action. And now looking at the yen. Today was a very mixed day for safe havens. You saw the 30-year bond lose about a point. However, gold held ground. So it's really surprising to see gold hold ground, especially the fact that the dollar index did increase too. A lot of still global growth uncertainties persist, but the yen has not been able to capitalize on that at all. 92.70 has been the sticky area of resistance that the yen really hasn't been able to hold out above. And what we've been saying, it paints a path to least resistance down to 91 as long as the dollar remains steady. So keep that in mind as you're looking to try to fish for a bottom here after this move or multi-month move lower here at the end, that there is arguably a path of least resistance until it closes above 92.70, 93. That path of least resistance goes down to 91. Again, keep that in mind. Now we're looking at the RBA. They do meet tonight. They're going to have a policy decision. It's going to move the Aussie dollar. 68.25 is the level to really keep an eye on to the downside if this moves. You have the 50-day moving average, a couple other indicators to watch down there. That is where your support is. We had poor retail sales out of Australia last night. The data hasn't been bad, though. They're not expected to cut rates again or really in for the foreseeable future, but their tone is what you're going to have to keep an eye on. It could be something that revs the Aussie dollar up. Now, when talking about the Aussie, you can look at the stock market, the U.S. stock market at record highs, and everybody talks about trade optimism. It's a little bit different of a tone here when you look at trade relative to U.S. stocks and then relative to global growth, because there is a reason to believe that the phase one, which obviously avoids any new tariffs for the U.S. equity market, that is favorable for the U.S. equities not having those tariffs. But it really doesn't do a lot for the global growth quite yet, and that's where the Aussie dollar and some of the other factors don't really capitalize on a phase one deal. So although the Aussie dollar has rallied, just overall risk sentiment has been better broadly, but there is good resistance up against 69. It's struggled at recently. It's been kind of building a wave of resistance there, just price action wise. But keep an eye on it on pullbacks down to 68.25. That's going to be a big support. Multiple indicators there. And then the Canadian dollar, that's also has just been somewhat unenthusiastic of late. They have jobs data later this Friday. They did not have jobs this past Friday. However, manufacturing missed for the Canadian dollar. It really didn't capitalize much on the crude oil rally we've seen over the last couple sessions, but there is building support. Lower tails have been left in the Canadian. 75.70 to 76. That's the support level to keep an eye on heading into tomorrow. Again, what's going to matter most is the ISM non-manufacturing. It's going to make or break what the dollar has done here in the past 24 trading hours. A better number, you're going to see the dollar rally pretty strongly. Could even take out resistance at 98. It's going to pressure all the currencies against it. But a miss here, it's going to help lift some of those other currencies. Not going to be great for the global growth story, but where you're worried about all the dollar's pairs right now for the global growth story, it makes it less worried relative to the U.S. dollar, because all it is, it matters about the pairs. So give us a call. We're here to help talk about anything on the board. 312-278-0500. You can email us info@bluelinefutures.com. You can check our website for updates, so you can sign up for a free trial of our research there. But remember, futures trading involves substantial risk of loss and is not suitable for all investors. Thanks a lot.